This video is perfect for someone who's brand new to day trading and is trying to learn the absolute basics of reading candlesticks. This video is the absolute 101 for reading candlesticks. We'll talk about the basics of candlesticks, what they can teach you, what they can tell you about price, and how are they used in day trading and swing trading. What is the basic anatomy of a candlestick? And we'll talk about the basic structure of price charts. In later lessons, we'll talk about different types of candlesticks, candlestick patterns, indicators, and lots of other more advanced topics. First lesson, the red and green things on the screen are candlesticks. We call the big fat part the body, and any skinny little part is called the wick. When you see a price chart, it's made up of dozens or hundreds of candlesticks. Usually green means the price went up, and red means the price went down. They don't have to be red and green, but that's most often what you'll see. So what are candlesticks and why do we use them? Basically, candlesticks tell us what price did over a certain time frame. So a candlestick could reflect a minute in time, 5 minutes in time, an hour, a day, a week. A candlestick can be any amount of time. It depends on the chart and the time frame that you're looking at. If you see a green candle, or normally a green candle, that means price went up. We call that a bullish candle. If you see a red candle, that means price went down. We call that a bearish candle. Let's pretend we're looking at a 5-minute candle. The absolute highest point of the candle, the tippy top of the skinny little wick, is the highest point that price went to in that 5 minutes. The bottom of the candle, the very, very tip of the wick at the bottom, is the lowest that price got to. In this example, the very highest that price went to was $11. The very lowest that price went to was $8. These numbers are made up, they don't matter, it's just to illustrate a point. So that's the wicks. The body of the candle is the big fat part. That tells us about the open price and the close price. If you see a green candle, that means the open price was lower than the close price. So price rose over that 5-minute time frame or however long the candle is showcasing. With a bearish candle, it's the opposite. It means that price opened, in this case at $10, and when the candle ended in 5 minutes, the price closed at $9. So that means over that 5-minute time frame, the price went down. And that's the important lesson about candlesticks. They're really just a snapshot in time. In our bullish example, this candle might have opened at $9 and closed at $10, but during that 5 minutes that we're talking about, the price went all the way up to $11 and was all the way down at $8 at some point. With some candlesticks, it can be a huge range. So quick recap on candlesticks. Normally, a green candle is called a bullish candle. That means price went up over that time frame. A red candle is called a bearish candle. That means price went down over that time frame. The very top and bottom of the wicks tell you the absolute lowest that price went to and the absolute highest that price went to. The big fat part of the candle, the body, tells you the open price and the close price. So very simply, how are price charts set up? Price charts are a bunch of candles. On the right side, the y-axis, we have price. On the bottom, the x-axis, we have time. In future lessons, we're going to go into a lot more detail about reading price charts, but this is the very basic intro. And that's it. This concludes our first lesson on the absolute basics of reading candlesticks. In our next lesson, we'll talk about different types of candlesticks. We'll talk about pin bars and dojis. We'll talk about candles that signal indecision, and we'll talk about candles that signal a lot of momentum. My name's Andrew, and I hope this brought you a ton of value. Click the link on the screen, and let's go learn about candlestick types.